think the Fed is serious. That pushes rates up at the back end, but the curve's been flattening. They're succeeding more in pushing them up at the front end, and that starts to impact market conditions. The thing is, unless the Fed moves quicker, the rate backup we've seen so far hasn't actually tightened financial conditions at all because of what's been happening with inflation. Money is still incredibly tight. So the Fed is going to need to be more aggressive in order to actually cause some sort of reduction in forward inflation expectations. They need to dampen growth. Now, will they do that? Will they move quickly enough to do that? I think that's going to be the trade-off all year.
And with that in mind, we're seeing a number of voices then, Luke, coming out and saying, hang on, maybe we need to see something a little more dramatic from the Fed. Do you see arguments around the need for some sort of maybe shock therapy for markets, some shock and awe in the shape of larger interest rate hikes than perhaps we've become used to in recent rate hiking cycles?
Well, this is one of those things where the market is secondary to the economy. Now, maybe it should always be secondary to the economy, but as we know, a lot of the time the market is leading what everybody's thinking. Here we've got, the Fed says, and I think everybody would recognize, they need to do something about inflation. An awful lot of people have forgotten the transmission mechanism. Raising rates doesn't get rid of inflation on its own accord. The point about raising rates, you go back to Volcker. I'm old enough to have been around when he was doing his thing and to have spent time with him. And the point was he moved rates far enough to cause a significant contraction. That's how you get rid of inflation. The increase in rates causes the contraction. The contraction is what reduces forward-looking inflation. So the question this year is going to be a constant sort of trade-off between whether the market believes that the Fed and the other central banks have really got the gumption to raise rates aggressively enough to actually reduce forward demand and therefore forward inflation. My own guess is you're going to get a series of these windows where the Fed is giving strong messages, the market gets sort of caught up in the idea, you get a push up in rates, and then what happens is you get a sell-off in equities, and then you'll suddenly find that they're not sounding quite as punchy as they used to, and suddenly you'll get a bit of backing off, and then things will feel okay. And you're going to get this sort of stop-start to how aggressive the Fed is going to be. To get rid of inflation, they would have to be a lot more aggressive than they've shown any sign. And given the nature of central bankers as politicians these days, it'd be a surprise if they're really aggressive enough.
Okay, that's interesting. Apologies for interrupting. And I mean, it would be a surprise to you if they were really aggressive enough. Might some of the caution come from the way that inflation has been created, is being driven by perhaps supply chain issues, supply chain disruptions? And so maybe there are questions about whether a more aggressive Fed would actually have the impact that you describe it having in previous decades.
Yeah, look, I think there's definitely a lot of question about where it came from, where it started, and whether a Fed moves would have done anything about the initial supply constraints. But the reality is the transmission mechanism that takes it from whatever caused the original effect into the employment market, and particularly wages, that then leads to persistent inflation is visibly happening, right? Wage inflation is significant. We see it in every industry. It's even been in ours, and what that's doing is that will drive forward inflation expectations, which drives forward wage demands. You get into the negative spiral that we had in the 70s and the 80s, and people have forgotten about, but it can come back very quickly once you've got tight labor markets and people demanding pay rises.
Are we in worrying territory when it comes to managing the macro economy globally? I suppose I'm thinking about here, Luke, when it comes to the levels of inflation that we're seeing. I mean, we heard Jeffrey Gundlach cautioning that he sees recessionary pressure building in the US economy. You've just described a wage situation which is not just limited perhaps to some pockets of the economy, but sounds from what you said to be more broad-based.
I think it is broad-based, and I think the economy is in a difficult place, right? We haven't had to get rid of inflation for a very long time. The whole sort of financial markets are premised on the idea that really inflation has been cured type of thing. if the inflation is persistent, then that will create, and sorry, if the inflation is persistent and the central banks try to do something about it, that will create significantly different financial environments and would create a significant sell-off. I think the thing that I'm saying is, I'm not sure that I see the sort of commitment in the central bankers to actually do enough to actually cause that effect. So I suspect we're likely to see volatile, sort of lumpy air pockets going through the year, but something where, you know, the central banks are not willing to allow a significant sell-off in equities. That would be a requirement if you're getting a significant increase in interest rates. And so we get this sort of, you know, actually loose financial conditions, even as the central banks are saying sort of hawkish type of things, but they're not moving quickly enough to tighten financial conditions.
And why do you think central bankers are not more willing to make those bold calls, Luke? Is it because they're mindful of the feedback loop between equities and the real economy, or is it for other reasons?
Well, it's partly about that feedback loop, but it's a lot of it is about, you know, we've lived in an easy money world for a long time. That's led to politicians believing that they can keep printing money in one form or another, or the central bank will do it for them. And central bankers have, you know, had a pretty easy ride of it. And so we've ended up with a situation where you know, I don't think Volcker could get elected as chair of the Fed today. You know, I mean, obviously not literally him, but somebody like him. You know, he was a pretty peculiar character. And, you know, he was quite happy to talk about the need for unemployment in order to get inflation down. I don't see any central bankers or politicians being willing today to talk about, if you want to get that inflation out, what you've got to do is create a significant reduction in demand, which is really about creating a recession, which would be bad for equities. But, you know, we're sort of stuck in likely a version of kicking the can down the road.
And is that okay? Have we all moved on from the Volcker years and have more maybe of a social conscience? Is that okay that we're in that situation, or is that monetary policy makers taking their eye off the ball?
Look, I think it's a good thing we've all got more of a social conscience today than people had in the 80s. I think there was a lot in the 80s to dislike. Is it okay? Well, that's an interesting question, right? I mean, I think we're likely to see persistent inflation for some time to come, and that's likely to require pain down the road to deal with it. You know, we'll be very, very lucky. There's a scenario you can create where, you know, so much was due to supply side shocks, and actually, you know, you get more flexibility in labor forces, and technology comes and remarkably saves us from the problem. But actually, personally, I think that's a very unlikely scenario. It's possible. So we're much more likely to be building up future issues through persistent inflation. But that doesn't mean we get a market problem this year.
Okay, and one of the areas that we have seen a lot of market focus as yields have gone higher has been technology stocks, of course, in 22. And this started, of course, at the end of last year as well. How will you be keeping the right side of technology trades then, Luke, as we go through 2022, given how stretched valuations look in some areas, but also the pivotal role that tech names play in our economy these days?
Sure, I think one has to avoid confusion between tech and forward earnings companies. So, you know, if you look at Apple, it's a tech stock, but they earn a lot of money today, and the present value of the cash flows from Apple doesn't look very different if you've got interest rates at 10 years at 1% or you've got 10 years at 3%. It looks a bit different, but not that different. The real thing you've got is we've been through a world when interest rates have been so low that a cash flow today is worth basically, or has been valued, at basically the same as a cash flow in 10 years' time. That, if you've got a company that only starts earning interesting profits 5, 7, 8 years away, is a very significant thing. And I think we're seeing that unwind. Now, you know, what that does is mean there is more of a focus on earnings. I'm not sure, you know, we've seen in a little bump where it's anti-growth, pro-value. I think over time, once the sort of froth is out of that, you get to something that's more about quality. It's more about consistency of earnings, which is what's likely to be the thing. But we're going to get significant factor rotations while we try and work out new leadership.
Okay, putting value center stage in 2022, would that be too simplistic though from what you just said?
Yeah, I think it is a bit too simplistic. I think we've had a very significant shift in value in the first 2 or 3 weeks of the year, and that has used up a lot of the froth that was the sort of undervaluation of some of the value names. And I think it will depend what actually happens on rates, and also then depends on where you're looking within the thing. So, clearly higher rates will be good for traditional banking stocks, as we've seen the last sort of few days in earnings from the investment banks. It's not particularly good for the investment banks, where they have a lot of their earnings from trading, and bear markets are not good for trading in simple terms. Similarly, you could see in other areas what we're seeing is, a lot of why value looks like it's done well is energy companies. It's not really a value play. It's it's much more been an energy play, but it's come through in that same thing. So I think it's better to think about value, about quality this year more than value.
We talked in the past about ESG themes, Luke, but I'm focused on the rise in energy prices that we're seeing at the start of this year, and also looking at some of the comments that we've seen from some other investors recently, talking about how there's a lack of investments in the fossil fuel space, and as we try to transition, perhaps that is a dangerous place to be. Are you concerned as we look ahead to 2022 that could be a theme that creates tension?
It certainly has created tension. And, that's why we've got very high oil prices, why we, the end of last year, had super high gas prices. And with the lack of investment, we're more likely to see squeezes in those commodity prices higher. Does it lead to permanently higher prices? No, I doubt it, because what you get is the substitutability effect. But it definitely leads to these squeezes. It's supposed to be a transition. It's not supposed to be a turn one thing off, create the next thing immediately. It's going to take years, not months, to create that transition.
You talked about how forward earnings companies maybe have been overvalued a little bit with the loose Fed policy. Perhaps the same or perhaps other assets have also been pushed up by the loose Fed policy. I'm thinking in particular about crypto. How do you see crypto playing a role in 2022? Have we answered the question about whether it is an inflation hedge or is a risk asset?
Well, if you look at the average day, it looks like it's uncorrelated to everything. If you look at any day with a significant, even a sort of 2% sell-off in equity markets, it looks 100% like a risk asset. And I think that gives you a sense about who owns it. For us, crypto are an interesting trading instrument. Don't take a case on either side of the sort of religion about whether it's going to replace everything or disappear entirely. For us, it's a trading opportunity. There's liquidity, there's interesting things to do from a trading point of view, and I'll leave the religious stuff to other people.
Okay, colleagues have been reporting that you're considering whether to start a dedicated fund to provide clients with crypto exposure. And we've talked about your what you think about crypto previously, and we've talked about how the way you do and don't deal with crypto at this point. But is that type of product for clients something that you're considering?
Well, as you reported, it's something we're considering, but it's not a case of, there's an awful lot of ways of just sitting passively long crypto. You could just go and buy the underlying. You can, there's all sorts of ETFs and so on, and we're not going to do something like that. That's not, we're not in the beta provision game. I think there's interesting opportunity to apply our risk management skills to the crypto space to rather than to be hamstrung by the volatility or require you to shut your eyes and hope, to use the sort of risk management techniques we've developed over 30 years, the technology we've got to actually provide a sort of risk controlled version of crypto, which we know that there's an interest from a number of clients.
And when we've talked in the past, Luke, you've talked about how a lot of investors, if they're worried about anything, they're worried about what's going on in bond markets. I wonder, and you said that you talked to them about the alternatives that might be available to them. Is there crypto demand in that context, or is it other alternatives that they're talking about?
No, it's other alternatives they're talking about. I mean, the institutional thing on crypto is everybody is talking about it in one form or another. In a lot of cases, they're really not sure whether it does or doesn't have a place in their asset management, in their asset allocation picture. But they really worry about the idea that they allocate X% and then it goes to X over 2%. And that creates a sort of political job risk for them. So, I think we see that as being something that people are intrigued by, but not taking into account yet.
Luke, we've spoken for about 17 minutes, and I'm not sure we've mentioned the pandemic, COVID-19 or Omicron, which comes as a nice surprise to me. I was reading that even the boss of Pfizer is saying that we will soon be able to resume a normal life. Is that, as we look ahead to 2022, is that what you see ahead, what you're preparing the business for?
Yeah, I hope so. I hope so. Look, I mean, you can see I'm in the office. I've been on a business trip to the Middle East last week. I'm trying to get back to as much of business as normal as I can, given the environment. The good news is we and lots of other people invested in significant upgrades in the air conditioning in the building, in ultraviolet treatment of the air as it passes through that. That means, when we look at the stats, people coming into the office have been, infinitely, but remarkably less likely to catch COVID than if they just go and buy a newspaper at the end of the road. Now, somewhere along the way, we all have to live with this. Hopefully we're getting there now. The UK is certainly moving that way. I don't think it's going to feel like business as usual in Asia this year. So if I look at my business travel for the year, I suspect I will be going to the States regularly, Europe regularly, and I hope dearly I get to Japan because we have very important clients there, and I'm also due a grandson or granddaughter being born in the next month in Japan. But I'm very worried we won't get there this year.
Luke, thank you so much. Good to speak to you. Thanks for spending time with us.
It's been a real pleasure.
Pat Gelsinger, thank you very much for talking to Bloomberg, CEO of Intel. We're going to look at the year ahead, and our plan is to look first at a couple of huge things that affect us all, but perhaps affect Intel particularly. One is sort of geopolitics, the other is inflation, and then we'll come and look at Intel itself. Then we might talk a bit about talent in Silicon Valley. But should we begin with geopolitics and this inevitable US-China arena, which is going on at the moment? Chips are right in the middle of that. To give a bit of background, US companies account just for most of the sales of the chip industry, but China is the largest customer for semiconductors. And you have been telling Western governments they need to invest more in making chips. I checked. I think America's now down, it just makes 12% of the world's chips. It used to be closer to 40%. And I wondered whether this year, this is about the year ahead, whether you think that's going to change, whether Western governments are going to begin to put money into chip making as you want them to do.
Well, thanks, John. Pleasure to join you on Bloomberg, and just this, Bloomberg, such a great brand, great audience, great to be with you. And as your statistics start to paint the picture, if we were here in 1990, the U.S. produced 37% of the chips of the world. Europe produced 44% of the chips of the world. Obviously, this is an industry that was born in the United States. And, Intel, the company that put silicon into Silicon Valley, we're quite excited about the semiconductor industry. But here we are, and today, 12% in the U.S., 9% in Europe. We've seen the shift into Asian markets, consolidation of supply chains, very aggressive stances on the part of a number of the Asian countries. And as I've said, this is more important than where oil is, right? Where are the chips? And given that we have this massive move of every aspect of humanity becoming more digital, I believe where the fabs are is more important to the next couple of decades than where the oil reserves are. And with that in mind, we've seen strong response on the part of the U.S. government with the CHIPS Act, right, which is, in Congress as we speak. I spoke to Secretary of Commerce Raimondo just yesterday, and she says, I work on this every day this year, right, to get this done. There's also parallel legislation going on in EU for their equivalent of chips, that they would rebuild this industry. And we have argued strongly that the world needs a more globally balanced and resilient supply chain for semiconductors. And the geopolitical uncertainties throughout Asia just reinforce that criticality. COVID has made it painfully obvious across so many industries on how important this semiconductor industry is. Everything digital runs on semiconductors. Let's build the manufacturing and supply chains where we want them. Let's not waste this crisis that we've been through.
But do you think you're getting enough? I mean, I guess I'm probably not a massive supporter of kind of industrial policy, but I checked. I think the bill that you're talking about, the chip industry is asking for 50 billion over 5 years. China's got a fund where it says it'll put 100 billion into companies immediately if they've got the right thing. Is that enough to help you?
I think it's a great start. As we said, when every dollar of CHIPS Act would need to be matched at least 2 to 1, right? So it's essentially creating a $150 billion investment incentive. Also, the bill includes substantial investments for long-term R&D to assure sustained advantage. The size of the EU proposal is very similar as well. So we think this is a great start. Maybe the second half of the decade there'd be a CHIPS Act too, but this has created a lot of energy. And, we believe that we, U.S. companies, but also Asian companies should be participants in building out and accelerating this capacity on American soil. And personally, I've been very involved in lobbying for getting the bill done. We are hopeful that before the continuing resolution ends in February, that timing is one that I think all the legislators are lining up to get across the line. And there's a similar timeline in Europe as well. So we're optimistic. We think it's a great start. And if we can go from 37 to 12, and I've set a moonshot objective where U.S. gets back to 30% over the next decade and Europe gets back to 20%. So we're looking at 30, 20, 50. I think that's an incredibly positive way to leave this decade, and one that we're optimistic that we'll be able to achieve.
Can I just push you a bit on that? It's interesting, you've made a noise about this. Most of the other people who make a noise in terms of standing up to China tend to be people like Facebook and Google, who don't have the same amount of sales there. I checked, China is still the biggest. It's your biggest customer. It's bigger than the United States. Do you worry that they might take retribution on you, or do they have no real choice in terms of chips at the moment?
Well, we believe that every country would want local suppliers wherever possible going forward. Our objective is build the best chips and deliver them into our customers on a global basis. And about 25% of my revenue is in China. We have deep customer relationships. They're ones where they're of course would want more of their own supply chains there. We fully respect that. But our customers there want to build the best cloud platforms, the best commerce platforms. And if our products enable them to be markedly ahead of what they would do with alternatives, we'll be able to continue to satisfy that business. And we have seen continued growth in China, and we're very committed to that market for the long term. But the U.S.-China situation does create, challenges for any company to find a pathway through that tenuous geopolitical situation.
Do you think on that? Do you think we're heading towards a world where there is effectively two internets? There is a Western one, and then there is one gathered around China, perhaps with a bit of Asia as well. Is that the reality of technology going forward, and something that people should prepare for?
We believe that, and if you think about Chinese policies like dual circulation, the Great Firewall, there's a level of disengagement of that market from the rest of the world. At the same time, we think of technology as neutral. It's neither good nor bad. It's neither U.S. or Asian.
I don't think the Chinese government, or for that matter, the American government, thinks about it as neutral. They make so much fuss about it as a isn't that the kind of political reality of the world you're in?
Yeah, certainly. There are aspects to that. And part of the CHIPS Act, as we've clearly said, hey, it's good economics, but it's also national security as well. And for that, when we have, 80+% of the world's supply in Asia, boy, that's not very comfortable for national security as well. And that's why I've said a geographically balanced, resilient supply chain for the most important resource of the future, and one that, hey, we're committed to that market, but we're very much a U.S. company. We're proud of that. We have a substantial presence in manufacturing in U.S., European markets. We hope to announce major expansions in both U.S. And Europe, and help to rebuild the supply chains on U.S. and European soils as well. So overall, we do think there is a level of disengagement, even though every day we are working to say, how can we live across those boundaries and support both markets and help to bring technology that enables the best around the world to come together to move these topics forward in the most powerful way. And whether that's, mRNA research, whether that's the most advanced AI, AR, VR experiences like Meta, and all of these are ones that live on technology, and that's what we're passionate about doing for the world's market.
Can you make the case for me for Europe as a somewhat skeptical, obviously in Europe, but looking at it? I mean, the numbers you gave earlier about the way in which European chip making has declined. I know you're building a plant in Germany, you have a test assembly facility in Italy, and you're doing an R&D center in France. But is Europe really credible as a chip making center?
Well, first, those are rumors that you just cited, but there are, we do hope to expand in Europe as well. We have a large presence today in Ireland as well as in Israel, but we are looking to expand in fab, assembly test, and R&D in Europe. Now, one example industry that might be helpful, though, to put a point on this would be the auto industry, heavily centered in Europe. Today, the automobile is 4%. In a premium car is semiconductors. Estimates are by 2030, that becomes 20%. As we go to EV, electric vehicles, and AV, autonomous vehicles, that are 5G connected, infotainment experiences inside of the car that rival the most high-end consumer experiences, it goes 5x to 20% for the auto industry, which is centered in Europe. So as one example industry, and this is part of what we've argued to an EU and to member countries, is you need this on European soil. And it's not just trailing edge stuff. These are leading edge technologies to support your most important industry. But there's also strong evidences in the communications industry, industrials, that are also very strong in Europe. So yeah, we believe that 20% in the Europe market by the end of the decade is a good aspirational goal and appropriate for the economies thereof.
A big economic argument at the moment, possibly the biggest one of this year, is about inflation. It struck me that Intel was almost the ultimate deflationary company over the past 20, 30 years. You had Moore's law, which at least you could interpret as you get ever more computing power for ever less money. Do you think that you worked with Gordon Moore? Do you think that idea of technology has gone, that we're now living in a much more inflationary cycle where you're going to have to pay to get more stuff?
Yeah, and we've recently, and I've spoken on the continuing Moore's law, that we believe that today our highest end chip is about 100 billion transistors on one package. By the end of the decade, we believe we can 10x that to 1 trillion transistors on one package. Just extraordinary, as we continue to drive that innovation. But as you correctly point out, we're in an inflationary environment where semiconductor shortages, massive capital build-outs that we and others are doing, prices of componentry, of the incoming materials are rising, the prices of labor are rising as well, and competing for top talent is rising. So we do think that this continuing progress of Moore's law as the ultimate deflationary, we're in a period where it's flat and maybe even slightly inflationary for a period of time against that backdrop of Moore's law.
So now, but you remain a Moore's law fundamentalist. It's gonna keep going, if not in terms of the money, at least in terms of the power.
Intel will be the steward of Moore's Law for decades to come. As I say, until the periodic table is exhausted, we ain't done. We're going to keep driving forward, improving the validity. And Gordon, now 92 years old, I just interviewed him for the 50th anniversary of the 4004, almost a sacred moment for the technology industry. That's right, Moore's Law alive, and we're going to keep it very well.
Well, that's a good transition into Intel itself. You've been there around a year. I think you've done a degree of what people would look at and say you've been sort of cleaning house. You were brought in to kind of turn it back round again. And I looked, it struck me, if you look at the history of big tech companies, it's quite difficult when people fall a bit off their perch. It's quite difficult to bring them back. And then Microsoft has done that. And years ago, Steve Jobs did that with Apple. But do you think it's possible to take something as expensive and big as Intel and kind of relaunch it? And that's what we're going to see over the next year.
Well, that's exactly the path that we're on. And curiously, Satya and Steve, I know Satya extremely well, knew Steve well. And Steve was outside of Apple 11 years. I was outside of Intel 11 years. So I come back to it almost sort of viewing, there's some magic in 11 years. And, we are back with a vengeance.
No black polo necks for you, though.
Next time I'll wear one just for you, John. But, as we've laid out a new strategy, clearly that is this idea of manufacturing, designing, as well as becoming a foundry for the industry, that we're manufacturing our chips as well as third-party chips in our factories, this massive build-out that we've just talked about, that, the semiconductor industry, about $500 billion today. By the end of the decade, expected to be $1 trillion industry. Yeah, we're investing big into that. I've also laid out a very aggressive path of process technology improvements to put Intel back in unquestioned leadership. And our products are getting stronger. Rebuilt the leadership team, brought back the Grovian discipline. Andy Grove, the famous leader of Intel, just this disciplined, engineering-centric culture for it. And it's been a good year, but we have a lot of work yet to do.
It's the core of this. I mean, it's a good test of this servers. I mean, you used to have pretty much all the market. I just have looked, and AMD's invaded it. And you also, perhaps, you have people like Google and AWS building their own chips. Do you think you can get back up to the same levels of market share? And is servers a legitimate place to look and say, this is where the battleground is?
Well, we've laid out, and as I have 6 business areas. One is the client business. And, we've just reasserted leadership in that with our most recent product launch. And as I've said, we're looking out the windshield and AMD's in the rearview mirror. So we're feeling very good. And that's our largest business. The server business, as you say, highly contested right now with AMD, and one that, I think we have a couple of years of, very combative, sort of, I've called it a knife fight in a phone booth, right? It's going to be, very combative, but our products are getting better and our execution. We've also laid out our graphics and accelerated computing, where we've not competed with NVIDIA. And guess what? We are going to start competing, and the products that we've already started to roll out to the industry are getting very good marks. Areas like our Mobileye, where, we're going to be the company that brings autonomous vehicles across the planet. And you have Tesla and Mobileye as the leading technology providers. We've also said our networking and edge business. We've been in the period where computing has become more centralized in the cloud. We're going to be the company that helps it be decentralized in the edge with our network and edge business in a clear leadership position. And finally, starting up of our foundry businesses. So 6 businesses, strategies for each one of them to be the unquestioned leader in their segments as we progress over the next several years.
On the manufacturing side, what very quick question you could answer, what went wrong? I mean, when you left Intel, that you were the kind of kings of manufacturing. Now other people, the names, TSMC, Samsung, all these people, put better transistors in, all this sort of stuff. When you look back, what do you think went wrong?
There was a bit of arrogance, a bit of hubris, right? When we led for decades, right, you get, a bit self-confident. in your own execution. We definitely missed on our 10 nanometer technology, which then had us betting against a key new technology called EUV, extreme ultraviolet manufacturing, and TSMC grabbed that and did a superb job of executing with it. Well, now we're catching that, as well as jumping ahead with a new transistor structure that we call ribbon FETs and new power delivery techniques. And these are things that Intel has been the only company that's led with new transistor technology for almost the last 30 years. And once again, we're doing exactly that, rebuilt the team, put a lot of investment into the capital to allow them to go much faster. We've said normally it's taken 2 years for a new process technology. We're going to do 5 nodes in 4 years. Unheard of level of pace and execution, and all of them are on or ahead of schedule at this point. So, we've just said, and my favorite word since I've gotten back to the company is torrid. We will have a torrid pace to the future.
What about on that? I mentioned culture at the end. I mean, Andy Gove, as I remember meeting him, that was a very much take no prisoners attitude. Only the paranoid survive. You seem to bring in a slightly kinder, gentler version of that. Do you think that reflects the way that Silicon Valley and technology is going generally?
I do think there's an aspect that cultures need to evolve. And, there was this, toughness, this aggressiveness to the Intel culture, and I hope to lose none of that. At the same time, it wasn't particularly diverse. If you destroyed a few people along the way to get the right thing done, okay. Where now I think we can do a much better job of being inclusive, making sure that we've allowed people to bring their whole selves into the workplace, and that's across faith, across sexual orientation, across cultural perspectives. But we will be no less aggressive, no less competitive, and no less data-driven and paranoid than the Andy Grove of the past. So I view it as what's old is new again, but also we need to make it much more appropriate to the Silicon Valley cultures of today.
I think in the old days, they used to describe that as the iron fist and the velvet glove, but I'm sure you will push through that. Pat Gelsinger, thank you very much for giving us your look on the year ahead. I wish we could keep you for longer, but you've been fantastic. Thank you for talking to Bloomberg.
Thank you so much. Great to be with you today, and truly wish that you have a great event. Even look forward to being together face-to-face with you in the near future. Thank you all. Stay safe.
Thank you.
Hi, everyone. I'm Emily Chang, and joining me now is Kris Marszalek, CEO and co-founder of Crypto.com, joining us on a late evening in Singapore. Kris, thanks for staying up for us, and great to have you here.
Thanks for having me, Emily. Great to be here.
So I want to start looking at the year ahead in crypto by going backwards. Talk to us about how the market evolved over the last year, because there was a huge pickup in adoption. And I wonder if you really think we hit mainstream, quote unquote.
Absolutely, it was a fantastic year for crypto in general. We've grew the industry from about 100 million people to almost 300, so a factor of 3. Increased participation both from retail and institutions, and I think that crypto entered mainstream. It's now a part of the culture. It's this unstoppable avalanche. So we're very happy that we were able to play a small part in this rising adoption of cryptocurrency globally.
In a new report that you're just now putting out, you talk about Bitcoin versus Ethereum. Which was stronger and why?
We don't really like picking winners. I think what you will see is a multi-chain future with different chains serving different purposes. And both have extremely strong years. So I think it remains to be seen what kind of additional innovation is going to come out of this space. And it's definitely not going to be limited to those two that you mentioned.
But you talk about how Ethereum weakened over the second half of the year, and I'm curious what you attribute that to, given especially all of the hype and interest around the merge and the future of Ethereum itself.
Right. I think particularly the second half of the year, you could see a rise of multiple LLM networks and it creates a sort of more dispersion in both user attention and in terms of people's investments. But I don't think it's necessarily bad. I think again the future is multi-chain, and different technologies are going to be used for different use cases. So the overall very strong year for the industry.
So let's talk about the future. You expect global crypto users to hit 1 billion by the end of this year, up from 295 million last month. What makes you think we're definitely going to get there? What gives you that confidence?
I think one of the key things to look at here is the expansion of use cases. 2021, very strong traction in terms of blockchain gaming, and mobile gaming as a use case. It's 3 billion MAUs, monthly active users, versus 300 million cryptocurrency holders globally. Right, so you've got now a use case that's growing extremely rapidly that can basically 10x the entire space. And I think people underestimate, how long it takes to get to this inflection point. But once you're there, it's just going to snowball. And there's obviously plenty of innovation happening in other areas, but this particular use case is something we're very, very excited about, and we're investing in heavily.
Well, speaking of snowball, are we in a crypto winter? What's happening right now?
Look. The market is still nascent. It's been highly cyclical, but it's also connected to what's happening in the broader financial ecosystem, right? So whatever moves you see from the Fed that affects equity markets or bond markets, this spills over into cryptocurrency space as well. I think that even you may see some sort of slowdown or volatility happening in Q1 and Q2. The industry is on fundamentally such a strong trajectory with such strong tailwinds that second half of the year is going to be phenomenal again.
So do you think we get to 100,000 for Bitcoin by the end of the year?
I'm not very good at predicting prices. We're more in the business of building rather than figuring out what the market will do. I think a good idea is to take a very long-term view and see what this technology can do to the entire internet over the course of the next 5 to 10 years. And if you take this type of view, then you just don't really care about the movements day to day or month to month.
So let's talk about the business. What sets Crypto.com apart from FTX or Binance? What is your special sauce, and why should traders choose you?
We've got an entire ecosystem of products, from the retail products for someone who just wants to buy their first Bitcoin, all the way to institutional traders who trade hundreds of millions of dollars every day, and everything in between. So you can find it in one place, from a regulated platform that's got great UX and low fees. And the business has been growing phenomenally. We grew about 22 times our revenue last year. So just massive growth. We grew from about 700 people to over 3,000. So we must be doing something right for our customers in terms of the products that we offer and how we serve them.
Now, that said, the last 48 hours for Crypto.com has been a little harrowing. You paused withdrawals, transactions due to unauthorized activity, quote unquote. Traders reported seeing suspicious activity. What happened here? What was behind this hack?
Right. So first and foremost, we invest very heavily in cybersecurity. We've got over 200 professionals around the world who collectively spent the last few years building a very robust infrastructure. And we call it defense in depth. So there are multiple layers. And in this particular incident, some of these layers were breached, which resulted in about 400 accounts having unauthorized transactions on it. We very quickly stopped it. We paused withdrawals. We fixed it. We were back online in about 13, 14 hours. And during the same day, all the accounts that were affected were fully reimbursed. So there was no loss of customer funds. Obviously, it's a great lesson, and we are continuously strengthening our infrastructure.
One outside analyst estimates $15 million was lost. I saw another estimate as high as $33 million. Can you give us a number?
Right, we are still working on a postmortem for the incident, and it's going to be posted on our blog in the next couple of days. So I'll leave the final numbers till then. We're working on it. In any case, one has to remember that given the scale of the business, these numbers are not particularly material, and customer funds were never at risk.
So I'm curious what more you're doing about this. What are you doing, and what are the plans you're putting in place now to make sure this doesn't happen again in the future?
Yeah, there are additional layers of security that we're implementing, as well as some new programs that we'll be launching together with the postmortem. I don't want to reveal too much at this stage, but the industry will know in a couple of days how are we going to address this. Historically, we led the industry in terms of security standards, certifications, and we very heavily invest in having military-grade infrastructure. So we'll continue strengthening it and leading the industry to keep this place more safe for everybody.
As I mentioned, you're joining us early from Singapore. The exchange is based in Singapore. Have you had any conversations with the Singapore Monetary Authority? Have they reached out, and what have you told them? And curious what they're asking for.
Right. At this stage, we did not see any outreach from the regulators. We are a regulated business in multiple jurisdictions, so we expect this, and we're putting together all the relevant reports that we will share whenever any inquiry comes in. It's just part of the preparation and part of the process of closing this incident with a full postmortem.
What's it like operating in Singapore? We've seen regulators take so many different approaches to cryptocurrency around the world, from the US to China. Talk to us about the environment there.
I think Singapore is very supportive of blockchain technology and cryptocurrency industry in general. There is a new law that has been enacted, written about 2 years ago, and it's a pretty robust framework that I think other countries should be looking at. We're in the process of securing 2 licenses over there. So overall, very, very supportive environment. I think it's a great place for the industry players, and there's quite a large number of players there.
Now, as I understand it, we're seeing some sort of crackdown happening in Singapore. Cryptocurrency ATMs are being shuttered. There's a crackdown on marketing. How is that impacting your plans?
I think the general point of view of the regulator is that the markets are still too volatile for the general public to participate in. So they want to rein in some of this this marketing activity. And I think over time, as the industry reaches new stages of maturity, these will be gradually relaxed. So it does not affect our plans in any meaningful way. We are committed to continuous investment in Singapore. We've got a large and growing team there, and working on licenses, and it's an important market for us as well.
Well, speaking of licenses, last month here in the United States, the iconic Staples Center in LA became the Crypto.com arena. You did a deal for naming rights, $700 million over 20 years. What does a sports partnership like that do for Crypto.com, for your business and your brand?
Right. You started the conversation by asking whether the industry went mainstream last year. I think this was one of this type of moments. And Staples Center is really special. It's such an iconic venue, and people really care deeply about both its legacy as well as what's going to happen with it in the future. So it was a way for us to make a statement and say that cryptocurrency is here to stay. It's a 20-year commitment, so it also signifies our long-term view and the fact that we're very bullish on the industry and where it's going.
You've also got some other partnerships going, sports partnerships, the Philadelphia 76ers, the Australian Football League. You're doing a deal with their women's league, which I believe is the first of its kind for women's sports. I'm curious what the motivation was for that, and what do you think about the lack of women in crypto, and as owners and as builders, and what we can do to change it?
Right. So I think the primary reason for doing that particular partnership is that there's an alignment of values. There's, we're all about self-determination and reaching your own goals, driving your own growth. So we're speaking the same language. But more broadly, for us, these partnerships are part of a strategy to become one of the top 20 brands in the world, a brand that people can really have an emotional connection with at the level of values. So we want people to understand what does this name stand for and how does it connect with issues that they care deeply about.
What kind of engagement are you seeing with athletes more broadly? What do they care about, and especially in communities that are really passionate about sports?
Right. So if you look at athletes, I think there's a lot of interest in this new space and how it's going to impact sports in general, how it's going to impact the way they interact with their fan base. There's definitely a lot of interest, and we're having quite a number of very interesting conversations on this front, but I think it's still a little bit too early to talk about it.
Now, I have to ask you about your marketing campaigns. Your big Matt Damon ad got a ton of publicity. It's still, the main imagery on your homepage. Is investing in crypto really as brave as summiting Mount Everest?
Right. I get this question quite a lot. I think the reason why that particular campaign resonates with people is that it's about building stuff and not about buying stuff. What we are building as an industry, as an ecosystem, is just the next iteration of the internet. And it's as a goal, it's very ambitious, and it's only natural that people are going to doubt whether this can be done or whether this even makes sense. And there's a lot of doubters there. So we wanted to go out with a message that underscores that this is a long journey that requires a commitment and grit and courage. But I believe very strongly that we will get there. And you need to have this kind of belief. You need to have this commitment. And in the end, and when Web3 reaches its full potential, the user is not going to be the product. Users are going to co-own the networks. So it's I think it's something worth working on. It's potentially extremely impactful.
So does that mean you're going to keep Matt Damon around?
We love Matt Damon.
As the face of crypto.com.
We love Matt Damon. We would love to do more stuff with him. I think a lot of criticism around this spot is from people who either didn't see it or they're just like fundamentally not supportive of the industry and don't have the full view of the kind of potential that it has to improve even their lives.
Well, if they want to see it in full, they can go to crypto.com. Let's talk about what themes you think are going to drive the industry in the year ahead. Some predictions, please.
Predictions, definitely gaming and metaverse. And in a sense, gaming is the gateway to the metaverse. So there's going to be plenty of activity in this space. For us, we take the approach that we're going to play in the M&A space, in the gaming side of things, to just build this capability very quickly. Not to the size of Microsoft's $70 billion acquisition, probably a little bit smaller, but we're working on a few deals in this space. And I think this is going to be absolutely critical. Building new experiences in the metaverse, with gaming being the gateway to onboard more users into this space.
Still, investors and potential investors really want regulatory clarity. What are you most worried about when it comes to regulation, and what would you most like to see?
I think there's an element of education. The industry historically has not done a good job of of going to the regulators as an industry with a clear plan and clear messaging. So you've got some individual efforts coming from different players, and that makes it more difficult for regulators around the world to actually understand the space. And we should be more helpful in guiding them so that they understand how to regulate effectively in order to reach their policy goals without killing innovation in the process, right? So I think we have to do better as an industry on this particular side. Luckily, there's a lot of work that is being put into this by a number of players, us included. So we will make sure that our voice is heard in the coming months and years, and that whatever laws are being put in place, give market clarity, protect the investors, but do not kill innovation.
Well, Crypto.com does have an opportunity to place its own bets on the future. You've got a venture arm. There is a lot of money flowing there. FTX, Coinbase, Paradigm, also investing in new crypto projects. What are you most excited about? What kind of projects are we going to see you fund and support?
All right. So our fund was launched only about 9 months ago. It's a $500 million fund. We've made about 30 investments so far. It's typically seed Series A stage. Sometimes we do slightly later deals, but very rarely. And the areas that we invest in is metaverse, DeFi, NFTs. So all the hot themes that you could that you're very well aware of. I think the key reason why founders love working with us is, first and foremost, we are now the third largest crypto platform globally in terms of user base size. We are founders ourselves, so we're super quick to make decisions. We're keen to lead rounds. We don't want founders spend time fundraising. They should be spending the time building stuff in the industry, right? So having this ecosystem and giving these new players access to it allows them to scale faster. And at the same time, we're just very supportive because we understand the journey of taking an idea from a napkin and building it into something meaningful.
Now, as you look ahead, what are you most worried about? I just spoke with Michael Saylor, MicroStrategy, of course, the largest corporate holder of Bitcoin in the world, more bullish than just about anyone. He said he thinks the writing is on the wall for crypto exchanges when it comes to regulation. What do you think about that? And what sort of keeps you up at night as you think about the year ahead?
Right, we've built a strong regulatory infrastructure over the last 4 years, so we don't have concerns on that front. Our biggest worry these days is that as we're scaling this company very quickly, if we've grew headcount 4 times in the last 12 months, and we're going to be at 10,000-15,000 people in 18 months. Preserving our culture and remembering what made us successful as a business and keeping true to our core values. I think this is top of mind.
All right, well, that's good to hear, especially as you project the market hitting 1 billion before the end of the year. Kris Marszalek, CEO and co-founder of Crypto.com. Thank you so much for joining us today, and I hope you get some sleep after this.
Thanks for having me, Emily.
Good afternoon, and thank you for joining me. My name's Anne-Marie Hordern. I'm Bloomberg Television Radio's Washington correspondent, and I'm so lucky to be joined by the authors of The Steal this afternoon. The Steal is a brand new book, The Attempt to Overturn the 2020 Election and the People Who Stopped It. And the authors are Mark Bowden and Matthew Teague. Mark is a correspondent for The Atlantic. He's a best-selling author. You might have read his book, Black Hawk Down. And Matthew as well have written for a number of publications, including The Atlantic, Esquire, National Geographic, and also a producer of one of his very famous essays in Esquire, The Friend. But gentlemen, I really want to get right down to the book. I finished it last night. What an amazing detailed journey you take us on of these everyday Americans living in these 6 states. You do a ton of research, and this was all having to do with this overturning of, or the potential, the trying to overturn from the Republican Party or members of some of the Republican Party of the election. And two things really stand out to me. One is you really pull back the curtain of the very mundane events of government that normally we wouldn't notice. And the second is that this book was really all about Republicans, the Republicans who tried to overturn the election, Republicans who stood their ground in many of these states and saw the certification of the election. So let's start with the big picture of the machine of the government. There's a quote in here from Gabriel Sterling, who's the Republican chief operating officer of the Georgia Secretary of State. And he says, the whole point of government is you're not supposed to know it's there. The road is supposed to get paved. The election's supposed to come off. You're not supposed to have to think about it. But obviously, the whole point of prompted you for this book is you had no choice but to draw back that curtain. Was that surprising to you, these stories you found while you were doing that? And Mark, we can kick it off with you.
No, Anne-Marie, I wasn't surprised because, as you say, the effort to overturn the 2020 election was directed at the machinery of our election process. And elections in the United States are not held out of the Capitol building in Washington, D.C. They're held in every neighborhood, every county of every state of the United States, and they're run by your neighbors and my neighbors and Matt's neighbors. So in order to understand how this effort played out, we had to go look on the ground in the 6 swing states at who were the people who were attacking the election, trying to overturn the count or the certification, and who were the people who were responsible for making that count honestly and for certifying it. And, that's where I think the real effort went. A lot of attention is focused on January 6th, but we feel that the more significant effort to subvert the election is what we document in the Steel.
And we're back. Sorry for the technical difficulties. It's a third year we're going into in the pandemic, and still sometimes technology is failing us. Mark, please, can you pick up where you left off about pulling back that curtain of the mundane government, what we're not supposed to see, which you really shed to light in this book?
Yeah, I mean, the assault on the election took place primarily in the 6 swing states where the vote was close. And And, as the elections in the United States are not held out of a federal building in Washington, they're held in every neighborhood and community, every county all across the United States by your neighbors and my neighbors. So the real story, Matt and I felt, was what happened on the ground in these 6 swing states, in both on the side of those who were trying to overturn the count or block the certification of the vote.
And how did you go about finding these individuals? Matt, maybe you could speak to that, because you really learn who they are, that you learn some of their everyday habits, the granular detail of these everyday Americans that are either helping with the election or trying to watch the election and think that fraud is going on. How did you find these individuals?
Well, some of these people were thrust into prominence, even though they had been unknown previously. They were sort of hoovered up by the Trump campaign and thrust into the national conversation because they had complaints or suspicions or something that the Trump campaign found to be potentially useful. And some of them were just everyday people that we found in talking with people in the key states. And some we were working with a fantastic team of researchers who helped us find and identify interesting people.
The other surprise I have was that all the cast of characters, for the most part, are Republicans. Were you both shocked by that as well?
I was a little bit surprised. We didn't go into the project thinking that would be what we would find, but it makes sense because, the effort that was taking place at the local level was to put pressure on people to either falsify the election count or to refuse to certify it. And, I think in many of those locations, because the vote was close, these elections are supervised and run by Republicans. And I think Republicans became particularly the target by Donald Trump and Rudy Giuliani and others because they were considered to be vulnerable to either being talked into falsifying the results or bullied into doing so. And much to their credit, these efforts failed.
Matt, what do you think of that? Were you shocked as well?
I was surprised. I went into it honestly expecting to find this to be a red versus blue issue, that people would fall pretty cleanly along that line. But in reality, it was a matter of who had good information, who knew the facts. And usually when people understood the facts, they would hold to them, regardless of their political affiliation. And so instead of red versus blue, it became a difference of truth and lies. Which is a line that divides every human heart. And that gives me some hope in the future for America.
So many of these, their individual stories across these 6 states, but while you're talking to these people, researching them, following them around, what's the one thread you think that followed each of them, even though they were all over the map of the United States?
Well, I think that the thread is
I think we might have lost
different voices. The complaints or the allegations were, shall I continue or?
Yeah, I can hear you now. Continue.
Okay. It didn't really matter whether these complaints had any validity, whether they could be proved or disproved, just the fact that they were being made, because the idea was to generate such a cloud of suspicion around the election process that even reasonable people would begin to think, well, maybe there is something to this claim of fraud just because there are so many allegations.
Mark, did you find that common thread as well? What were the others of these individual cast of characters?
I'm sorry, was that a question to me?
Oh, no, sorry. Matt, sorry, Matthew.
Well, one thread that I've sort of mentioned already is that it was really a matter of people holding fast to what they knew to be true. And an example of that comes to mind for me is Cheryl Guy, who was a county clerk in Antrim County, Michigan, a fairly remote county up in northern Michigan. And she is, as she would say, she's not a tech savvy person. And she was dealing with new computer technology to her. And she accidentally shifted about 3,000 votes from the Trump column on election night to the Biden column. And one of those votes was likely hers because she was a Trump supporter. And she realized her mistake within a few hours and came forward and said, I've made a mistake. It's human error. And I apologize. It's on me. But by then it had already been taken up by the effort to overturn the election. And so quickly there were private jets coming in the night, and people in Washington, like Rudy Giuliani tweeting about fraud in Antrim County, people coming into her office. They really turned her life upside down. And she, a lady who has worked for that county for her entire life since she graduated high school, is not going to run for re-election again as county clerk. And I think that she held fast to what she knew to be true, but there's a cost that comes with that too.
Yeah, Matt, I want to ask you, what is her life like now? Because when you talk about this in the book, it does seem like she's completely ostracized as well from her community. Is that still the case?
I don't know if it's still the case. I think hopefully it's died down a little bit, but it was really painful for her. There were people who she had known their entire lives, who had been neighbors and friends and churchgoers and acquaintances, whose very birth certificate she had signed herself, who called her un-American, not patriotic, and much worse than that. So it was a really painful, difficult time. And I think things have settled down politically a little bit in Antrim County since then, but she's not going to run again.
Yeah, and we should note that she came forward immediately apologizing for this technical error she made and fixed it, felt terrible about it, but it still became this really tornado for her and her life. When you look at these characters, who gives you hope, and who do you think the American system needs to worry about? Mark, we can start with you.
Well, Cheryl is certainly one of them. I mean, what all this pressure on her was to get her to say that she hadn't made a mistake, that the machines had switched the vote. This was the narrative that the Trump campaign was trying to promote. She knew that wasn't true, and much to her credit, she refused to change her story. The same is true of Clint Hickman, who was the chairman of the Board of Supervisors in Maricopa County, Arizona. Maricopa County is Phoenix, and it basically is 90% or more of the election in Arizona. So as goes Maricopa County, so goes Arizona. And Clint, as the president of the Board of Supervisors, was responsible for running the election in Maricopa County. And he was intimately familiar with the difficulties and the challenges and the methods by which they ran a fair and honest election. So on election night, Clint is a lifelong Republican and a Trump supporter. So he was shocked and disappointed when his own county and the state went for Joe Biden. But then he was even more shocked an hour later when Donald Trump came on television and specifically named Maricopa County as a place where the vote had been rigged, where the vote was fraudulent. Well, Clint knew that wasn't true. And he ended up, being the source of all kinds of attacks, protesters on his front lawn, people calling for his prosecution and execution as a criminal, calls from Donald Trump himself, trying to get him to alter the vote count. Clint, much to his credit, basically showed that the American people are not as dishonest as Donald Trump would like them to be.
Right. You both come on to this talk with a little bit of optimism for the future. Matt, what do you think this signals, all this research about, one, the midterms this year, and then the broader election in 2024? Do you think the system is ready for this again?
Well, I hope so. The people who tried to organize the theft of the election have had a practice run now. But the system has also had a practice run at standing up against that. And Mark mentioned the decentralization as a strength of our system, and that still holds true. It's not something in one building in Washington, D.C., where you can run in with a Viking helmet and claim to overthrow the election. It happens in your town and mine and counties all across the United States. That's still the case, and it's still our friends and neighbors who are running those elections. There are more worrying signs when it comes to the placement of election supervisors by the GOP, things like that. That could be a problem. However, it would be a short-term solution because in any representative system of government, the party that comes up with policies that appeals to the plurality of the voters will win in the end. So I think, it really will come down to ideas.
Mark, what is your thoughts going into the midterms and then presidential election 2024, knowing all of this granular details of how our election really works?
Well, as Matt said, I think that, despite these efforts by Trumpists to place people in responsible positions in places all over the country, it would be extraordinarily difficult to alter the count in a national election. You might succeed in an individual county even or a precinct. But I mean, there are just so many people involved. Most people are honest. Most people believe in the importance of an honest election count. So I just can't see the election itself being altered. I think the more vulnerable place is certification of the election. And there, I think we're seeing efforts in state legislatures all over the country, even though all of these efforts failed in 2020, to put people in positions where they can basically disavow or set aside the electoral vote and appoint their own slate of candidates. I don't think that would be terribly important in a congressional election, but in a national election with the president at the top of the ticket, that's a real threat. And I think it's something that Congress could act to safeguard.
Right, and Congress is talking about voting rights this week. And there's also, of course, the January 6th committee that is ongoing in their investigations, which are a lot of the reporting that they're looking at, you include in your book. Do you think their work, this committee, will be able to impact and safeguard our future elections?
Well, my hope is that it will. I mean, there are certain diehard supporters of Donald Trump who will just discard anything that this committee says. And already, we know that the Republicans in Congress have labeled it a purely partisan exercise. But I do think that the airing of the details of what happened, which we've done in our book, and which I think will be done on a national level during these hearings, will do a lot to make Americans understand exactly what happens. And I think fair-minded people will be fairly shocked and disillusioned by the Trump effort.
Matt, what do you think? Do you think the commission will ultimately be successful, given also the fact that it is up against a lot of or lack of cooperation thus far?
Well, the lack of cooperation is troubling, but I think that the American people will understand, hopefully, how to interpret that. There will be partisans, as Mark said. Some people will be so hardened in their stance that they won't be persuaded of anything. But I think that many, many Americans, when they hear the details, will be moved by facts. Maybe not completely, they may not abandon their party, but hopefully they will hold to the candidate who's most loyal to truth instead of a person.
I have a few seconds left. Just a quick question. When are we going to get the film?
So far, we have no indication that's going to happen, but it would make a very dramatic story, without a doubt. There's some great characters and some very heroic kind of profiles and courage that we document in this book, and I would love to see it get that wider audience.
Matt, you're the producer?
We'll see. I'll work on it. We'll see.
Okay, we'll see. All right. Thank you both so much for joining me, Mark Bowden and Matt Teague. I'm so sorry, Mark and Matt. You guys are a tongue twister. And their book, The Steal. Thank you so much.
Thank you, Anne-Marie. Bye-bye.
Hi, everyone. I'm Carol Masser of Bloomberg Business Week on Bloomberg Radio and Bloomberg TV. I'm here with Chuck Robbins, the CEO and chairman of Cisco Systems. Chuck, great to have you here with us. You know, listening to that last conversation, you and I were talking as we were getting ready, just a reminder of where we were a year ago. There was so much uncertainty. When you look at this year, 2022, how does it feel to you?
Hopeful. First of all, Carol, thanks for having me. I think that you know, we went into 2021 with high expectations, and unfortunately, we came to realize, to your point earlier when we were chatting, when you think we're moving on, we get surprised and realize how little is in our control at the end of the day. But I think this year, you know, we're hopeful that that Omicron is the signal that we're getting close to the end. You know, when you listen to the medical experts, they at least insinuate that may be the case. Obviously, there's a risk of other variants, but I think people are ready, and I think they've been ready, as we all are. And as much as we love this technology and we're so proud of what it's been able to do to keep the world running and keep people productive, I think people are dying to get back and spend time together and be in person.
What do you think in terms of the general macro outlook? How does it feel? You know what we've been talking about. I'm sure you guys have too. You have certainly on some of the earnings calls about supply chain problems and being able to access, you know, all the materials that you need. How does it feel? And does the economy feel like it'll be growing, but maybe not as rapid as we'd like?
Yeah, it's so hard to predict, because I think if you go back to March of 2020, most all of us thought that as we went into a global pandemic that the economy would suffer. And we saw just the opposite over the last 2 years. And so there's a couple things I think that are going on. Number one, the year-over-year comparisons will just make it very difficult because 2021 was such a robust year. And then I think obviously the Fed is going to move and begin to raise rates, which will have some impact on the economy as well. But I think that you know, the investment cycle that companies are in the middle of, and how they're thinking about technology investments and how they're thinking about their future, it seems to be a pretty robust investment environment that we see, and particularly in our space, we see some big long-term trends that we think will continue to be tailwinds. We may see some ups and downs because of temporary macro issues, but I think long-term will be fine.
Cost pressures, though, inflation, labor shortages, that's still part of 2022, unfortunately.
Unfortunately, that's true, and you know, as so many of us have said, some of that stuff is going to be transient, but a lot of it's not. I mean, wage inflation doesn't go back. I mean, you know, I joke with our team. I can't remember an employee when things get, you know, when inflation subsides, they come and say, you know, I'd like to get part of my salary back. So, I mean, whatever we're having to do on that front will stay with us forever. But, you know, the good news is that what we've learned around hybrid work and what's possible, where people can live, it gives us the ability to tap into lots of different geographies and hire people where they are, and actually get exposure to much greater talent pools.
Chuck, talk to us about hybrid work. You guys at Cisco have been doing it pre-pandemic, and so have a lot of firms in the technology industry. There is a huge debate out there still, and you guys have certainly seen the benefits of everybody needing to be connected. I'm working at home again for a week or so. Does that continue? Is that with us? Is that one of those long-term trends? It ain't going away.
It's not going away, and I think, you know, we're going to a certain extent, we're going from this great resignation to a great experiment, right? We have I speak to many of my peers. I was together with 8 or 10 of them yesterday in Washington, and you know, before the session, we spent time saying, well, how are you thinking about it? What are you doing? How are you handling this? But so there's these variations of hybrid work that everybody's trying to embrace. And, you know, we have two aspects. Number one, what are we doing as an organization, but also the technology that we build that's actually enabling our customers to deliver on whatever version of hybrid work they would like to deliver on. But to your point, we had 10 to 15% of our workforce that worked from home 100% of the time before the pandemic. And I think that the way we're approaching it is we're leaving it to the team. So we're not having any sort of mandated return to office policy. We will let the teams know when the offices are open so you can return to them. But as an example, if there's a team of 8 or 10 engineers and they believe that being together in person 2 or 3 days a week is beneficial, they'll make that decision, and then they'll choose the days that they want to be in the office together. And we think that's a better way than just a random, hey, we want everybody in the office 2 days. It's just not all that logical to me, but we'll see how it plays out. And we'll see which of these models actually begins to emerge. But we think the approach we're taking gives flexibility, gives our employees flexibility. Many of them can live wherever they like. Obviously, there's some jobs that are going to be required to in a certain geography, but we think it'll just continue to contribute to the culture that we tried to build.
Yeah, we're definitely seeing Americans and people all over the world kind of being able to move around. I am also curious in terms of innovation. This was one of the things we talked about during the pandemic, and I'm thinking about, we're looking at the year ahead in technology. I think there were folks saying, well, wait a minute, would Zoom have been created if we were in a pandemic environment where people weren't together, maybe in a room? What would you say for a company that's been, on hybrid working, for years? What happens to innovation and disruption and being able to figure out new ways of doing things?
I have to say, I was amazed during the pandemic at the level of innovation that we were able to drive and that many companies have been able to drive. That was probably the one question mark that I had. I knew we could be productive because we build the technology, we do it, we use it. So I wasn't all that concerned about that, but I really was worried about how much innovation are we going to be able to drive with our engineering teams, spread apart. And they did an amazing job. And so many companies did an amazing job. And so I think the great news is that government leaders around the world, CEOs, CXOs, all experienced this technology up close and personal in ways that they hadn't in the past. Right? Most CEOs didn't do a lot of video meetings. And now I have my peers who are saying, I can't imagine a world where I take a 12-hour flight for one meeting and then come back. It's just not going to happen. And so I think they realize that this technology has an incredible power. No one expected the world to remain as productive as we were during this time, which says the technology is really powerful. And I think that after having experienced it up close and personal, I think they're much more open to looking at how do we accelerate the use of technology across various aspects of our businesses, which continue to lead to different the need for innovation and creative thinking, which I think is happening at an accelerated pace.
So I meant to say congratulations, because I believe this is your 5th year as CEO of Cisco. And I do think, is that right?
Seventh.
Oh, forgive me. Okay. So 7. So when you look back at that tenure, and you think about the things that you prioritized or things that you might have said, I'm not sure if that's going to be a big trend. Cloud, you were one of those folks that identified it when maybe some were questioning it. When you look back and then look ahead, what are the things that you're most proud about in terms of the time you've been there and those trends that you're like, I wasn't so sure, but it did turn out to be very significant. And then as we look ahead, those things that we are questioning in technology, but that you think we should be paying attention to.
Well, so I think that early on, you mentioned cloud. There was a belief that cloud was going to be the downfall of our company. And I am proud that we embraced it and didn't try to fight it and didn't try to convince our customers that that wasn't the strategy they should employ. We actually embraced it and looked at what does it do to our portfolio? How do we need to evolve our products to actually enable our customers to more effectively use the cloud and SaaS applications and all the things that they're trying to do. So I'm really proud of that. I'm incredibly proud of the team that we had working on this next generation silicon technology that we've been building. And no one really understands this because it's not a consumer product, but our team spent over 5 years building this next generation of silicon that are now powering the internet of the future, as well as the next generation cloud infrastructure at a much lower power consumption than they have in the past. So the ability to deliver higher performance and at the same time help them achieve some sustainability goals and things like that. I'm really proud of what they've accomplished there. I think our teams have, I think the culture that we have really built over the last several years, we've always had a great culture, but I really think it has blossomed. And it's resulted in us being, #1 global workplace 2 years in a row. We're actually #2 this year, but I'm still proud of what the teams have done. And as you look to the future, I think that this year I'm most interested in the human aspect of dealing with this new world that we're going to operate in. Because over the last 2 years, that's been one of the biggest things we've had to evolve with our leaders, is thinking about how do you lead people who are now working from home with children that they're going to school in the next room, with elderly parents who are staying with them, who don't have the ability to operate in a normal way that they have in the past. And this was a big challenge that we all had to work through. And I think now, as we get into this hybrid work model, I think the culture, the people, the leadership, how we deal with our employees is going to be actually one of the biggest challenges. I think the technology is actually the easy part.
Well, and what's interesting too, you have been out there in terms of inclusiveness and the power of that, and whether it's connectivity in terms of not just the United States, but the world. And I know you think about this with the infrastructure spending bill that has gotten mired in politics once again. Why is that so important? I mean, from a logical brain, right brain, left brain, I get it, right? Like we should all be connected, but it is really important. It has an impact. It will impact the world in so many different ways.
Well, if you think about it, half the world's population is still not connected, which to all those of us who live on this every day, it's an incredible thing to think about. And if we did drive connectivity, I mean, you could bring 500 million people out of poverty. It's trillions of dollars that could be added to GDP, but that's actually the GDP aspect to me is very secondary. We know that when we connect people, we give them opportunity. And one of the things that we've learned during the pandemic is that we can deliver aspects of healthcare over this technology. We can definitely deliver education over this technology. So if you connect people, give them access to great healthcare, give them access to great education. And the other thing we've learned is that we can actually hire people where they live. We don't have to ask them to move to expensive areas like Silicon Valley. They can work where they live. So we can connect them, give them healthcare, we can educate them, and we can hire them. And this has incredible potential to solve some of the inequality issues, create more inclusivity. And I think not only in the United States, but around the world, it is absolutely critical for us to continue to execute on that. So the broadband investments that are being made in the United States, I think of, like everybody says, it's power, right? You wouldn't think of having a home that didn't have electricity, and we should feel the same way about broadband. And I think it was on display, obviously, during the pandemic with those students who could be educated very effectively over the technology, and those who struggled because they didn't have high-speed bandwidth. And so I'm really pleased to see that that's going to roll out. We've opened a rural broadband center in North Carolina to help all those providers out in a lot of the rural areas understand the technology, the new capabilities, and new ways that you can actually connect. We're working on the UN Broadband Commission to make sure that globally we're helping drive this around the world. But I just think it's core to creating opportunity, and that's what it's all about.
It's interesting when you talk about this inclusive future for all. How do you contrast that, which could have such a huge impact on us globally? As you said, it's not just about GDP, it's so much more in terms of really giving equal access for people and opportunities. So how do you juxtapose that against some of the technologies, Chuck, that we've been talking about, whether it's the metaverse, whether it's all the cryptocurrencies and blockchain? Like, what are your thoughts about some of that stuff? And I mean, are these things, when we look at the year ahead in technology, you think there's just going to be more momentum when it comes to things like that? And it makes sense.
Well,
Does it make sense to you?
Yeah, I mean, some of them do. Some of them I'm not an expert on, but I think a lot of them I'm not an expert on. But if you think about the metaverse, I mean, that's a perfect platform through which we can deliver what I was just talking about. I mean, why can't the metaverse be the platform through which we deliver education, we deliver healthcare? So I think that's all going to play out, and I think it's actually probably going to end up about on television, but I think that's super important. I think blockchain is also very important. I'm not a cryptocurrency expert, but I think the distributed ledger can help us in so many ways. And I think there's a huge intersection between some of the technology we build that can actually optimize that ledger, that can actually authenticate and provide security. So I think those technologies will be very important in the future. It's really funny with these these emerging technologies, if you think about it, we talk about them for almost a decade before they really take off. I mean, how long have we been talking about blockchain? And
Long time.
I think we're on the verge of it becoming very real. I think we also have other areas we have to focus on, like the ethics of AI that are very important for us to think through. But there's a lot of powerful technology.
What in particular, Chuck, about AI? Is it privacy issues? Is it?
I think there's privacy issues. I think there's the opportunity to drive, unintended bias through AI. And I just think it's important for us from a public-private partnership perspective to actually study and understand and make sure that our students who are being trained in our higher education institutions for technology think about these things as they come out. I think that we need to make sure they feel a responsibility to deliver technology that is actually targeted towards positive solutions. Yeah. Over the years, every technology ultimately is used for both, positive aspects, and then there's always some element of negative use. And I think we need to try to optimize on the positive side.
Chuck, when you look ahead at the year in technology, and I know that's what we've been talking a little bit about, there are lots of things out there. And you talked at the beginning about some of those macro concerns that we faced last year, whether it's supply chains and so on, labor shortages. But there's other things. There's geopolitical tensions. There's the rough relationship, increasingly rough, between China and the United States. And that is still a big market for everybody, China. We know that the opportunities are there. The regulatory oversight of technology. What are some of is there one or two that you say, if you're a tech CEO, a tech leader, you need to be really watching out for this? And there may be something I didn't mention.
Well, I think that, look, the resilience in the supply chain and the capacity of components, and it's not just semiconductors, it's power supplies, it's substrates, all of these things. We just need more capacity, and we need more geographic diversity. What we learned during the pandemic is in our supply chain, we have always had regional diversity. So we would have, in case of a natural disaster like a tsunami in a certain area, we would have the ability to move to another part, perhaps in the same country. What we had never prepared for is an entire country shutting down.
Yeah.
And so I think it's highlighted the need for us to really think about resilience in the supply chain, and redundancy and capacity of components and geographic diversity, I think, is a very important one. I think for CEOs, we joke that so many of the things that we've had to deal with over the last 5 or 6 years just were never on our minds when we took these jobs, right? Whether it's tariffs or it's pandemics, it's being
cybersecurity.
Cyber we kind of expected, but it's actually on steroids. I mean, there's $5 trillion at risk over the next 5 years from cybersecurity. You have, the social justice issues that we're being asked to chime in on. You've got the geopolitical tensions that are happening, and so all of those things make these jobs much more complicated. And they're things that are somewhat out of your control that you just have to be ready to deal with and build lots of scenarios for them, honestly. But on the topic of China and the U.S., I think it's super important for us to find a way to coexist. We're going to compete, I know that, and we have different thoughts about, how the U.S. government versus the Chinese government. But I think for the global economy and frankly for the world, I think it's important for us to come to some common ground on how we can coexist, and I'm hopeful that the administration will continue to take that approach going forward.
If there's one thing that, I know this is so trite, I feel like, and you probably asked it a million times, but the one thing that keeps you up at night, because I do think about, like you said, that's a full plate, that's a buffet of things, right? That, as you said, as leaders, who could have thought? There's no playbook. None of us had the playbook. Just got about a minute or so left here. Is there one thing that you think, this is front and center? Every day I get up, I think about this.
Well, it's not the same thing all the time. So right now it's generally around supply chain. But I think at a higher level, what I would say is you spend time thinking and maybe worrying about those things that you can control, and then you spend time doing scenario planning around those things that you cannot. So you can be prepared for things that may happen. There's always going to be the surprise. But I think just spending time on the things that you can control is most important. And But I'd say most CEOs today, I'm not sure we worry a lot. I think we think a lot about things that are going on. And I'd say the most critical area is supply chain.
All right, we're going to leave it on that note. Chuck, thank you so much for your time and for being
Thanks,
part
Carol.
of our event. Yeah, be well. Chuck Robbins.
Always great to see you. Thank you.
Same here. Be well. Take care. Chuck Robbins, CEO
Bye-bye.
and chairman of Cisco.
Well, it is a joy to be with you all and welcoming, well, she needs no introduction, Ursula Burns. But in case you just needed to be reminded, she, of course, was been the CEO of Xerox, the chair of Xerox, now the chair of Teneo, the key consulting and basically CEO chair whisperer there. But you're also on the board of ExxonMobil, Uber, Endeavor. Philanthropically, you're very focused, whether it be the New York Ballet, whether it be, of course, on the Ford Foundation as well, and your key focus on the board Diversity Action Alliance. Ursula, welcome to 2022. Welcome to looking at the year ahead. And you know Chuck Robbins so well yourself. You're speaking to him monthly, if not weekly, if not daily, and many other CEOs and chair people. What are they saying? What is their number one concern right now?
Yeah, I think that, you know, as chairwoman of Teneo, I have the advantage or the benefit of having a lot of interaction with business leaders in the C-suite. And 2022 is a year that is forcing them, based on the last 2 years, to take stock in their businesses. I mean, almost from the very basic level, what is their strategy? How are they going to engage, you know, to engage and motivate their employees? How are they going to deal with diversity, equity, and inclusion? How are they going to deal with the environment? How are they going to deal with government changes, just the geopolitical situation around the world? So most CEOs who are engaging with Teneo, we had a record year in 2021, primarily because of the situation that our business leaders are facing, which is a large amount of uncertainty. I just heard Chuck speak about cyber. It's another area that is just, you know, high on the list of change and on the minds of CEOs. The good news is that everybody's starting in the same place, so no one is behind or ahead right now. The good news is that there is still a lot of technology advantage and technology that we can leverage out there, and people are looking for help. People are looking for help and assistance to, you know, lay a new course for their businesses.
Yeah, laying a new course is an interesting one. I go back to, I should have mentioned, of course, you're an author. Your memoir, Where You Are Is Not Who You Are. And looking back at some of the writings that you make there, you talk about how you joined the Business Roundtable in 2009, newly as CEO of Xerox. And oddly, there's a sense of deja vu in many of the things that you were facing then. You talk about this, what brought you together were issues of taxation, issues of supply chain due to the ports in California. Well, hello, that comes ringing back to us now. People to fill boards. And that is still a lot of the issues that face people now. Talk to us about really the way in which you're trying to see leadership come together to change what leadership looks like, particularly at a board level.
One of the very exciting things about the last 3 years, I mean, as devastating, 2.5 years, as devastating as the last 2.5 years has been from an economic perspective, from a health perspective, it was a catalyst for an acceleration of things that were just popping their head up before. Now, where business leaders are, and I'm going to get to diversity as a specific example of this in a minute, where business leaders are now is that they can no longer avoid or delay some of the items and issues that some of us had seen for a long time. The environment, and dealing with the environment in a way that's transparent, that is a leadership perspective, so leading, not just doing the bare minimum, dealing with diversity, equity, and inclusion in that way as well, where what we're seeing in our work, what Teneo is seeing in the work that we do with business leaders, is there's an increasing number of businesses that are putting in hard metrics for the C-suite to achieve, and that are aligned with pay. This is in the US, this is a very, very new phenomena. We've been speaking about diversity, equity, and inclusion for a long time. We've been speaking about board representation, diverse board representation for a long time, and C-suite representation. And what we're seeing is an increasing number of business leaders, businesses, boards, saying we're going to now treat this like some of the other metrics that are very important: growth, profitability, EBITDA growth, whatever, all of the financial metrics that we measure down to the penny. We're going to start putting in metrics and measure and align your compensation to progress in the DEI metrics as well. This is I think, I don't believe that we can go backwards on this. This is not, I said this before we had any work. I thought that the human outcry after George Floyd was one that we were not going to be able to tamp down easily. And it seems that it's true that we're not going to be able to tamp that down, that boards that are more diverse now than ever before and are increasing in their diversity, not only gender diversity, but also race and ethnicity diversity, those boards are starting to have a bigger and bigger presence and a louder and louder voice. And that's, I think, good for business across the board.
It's interesting that you sort of highlight there that basically money talks, in the respect that if you put a monetary unit, an amount of pay to it, it will force an act of change. How much do you think that's also investor-led? Because a lot of this is about where money flows. When we look at environment that you just paid lip service to there and thought focus to, you know, you of course on the board of ExxonMobil, my goodness, have we seen change at that particular business? And has that been something that investors needed to push on, or have boards been able to get ahead of it, do you think?
No, I think that I was remiss in not saying investors earlier. One of the more positive outcomes and aspects of the work that the BDAA, the Board Diversity Action Alliance, and other organizations like this, we're not the only people who are pushing this, has been able to see is that investors and investor groups are one of the best advocates for change, obviously, right? And they are the holders of the money. They are the, the pockets of business. And as investors, you spoke about it in ESG and ExxonMobil, as investors became very serious about this topic, companies had to react. And if they did not react, the investors speak with their wallet and with their vote. So we're seeing that in diversity, equity, and inclusion. We're seeing it in ESG. We're seeing it in just what we call good wages, just good work, part of the ESG, how we treat our workers, et cetera. So investors are a very, very important part. Another important part that's becoming more and more clear today is what I call it the worker-led movement. I talked to you, I think 2 years ago about this at the very beginning of COVID. I said, one of the things that we have to watch out for and be very careful of and lead, if you're a good leader, if you're a good business leader, you have to get ahead of the power of the worker, meaning be in concert with your workers. Right now, we are struggling, business everywhere. There's not an institution I'm engaged with, which is kind of hard to imagine that's not dealing with how do they get people to come to the company? How do they keep them engaged and motivated and excited? And they know it's not just pay. It's about how they feel about the work that the business is doing. It's about how they feel that they fit into these environments. So diversity, equity, inclusion, ESG, all of these movements are now becoming embedded in corporations because investors, employees, consumers are all on top of this as well. And I think it's a great time to be a business leader. It's a time that you have permission to change, permission to speak up, permission to try things, permission to experiment on what a lot of people call, and I like to hear the words, a more inclusive capitalist structure. That's basically what is happening today.
Actually, what's so interesting, going back to what you mentioned before, that struck me was you're saying no one's actually ahead or behind here. Everyone's still got a fighting chance. I'm interested though, some people must be deploying a focus on culture that you think is better than others. Where are the business leaders that are doing it right, making it work for them? Where do you think some of the biggest strides are being made?
Yeah, I'm going to be very selfish here in my response because I spend a lot of time with the 4 organizations I'm going to mention, and they are, and they're just, I think, differentiating themselves. I'll start with the Ford Foundation. They have been a leader across the board in engaging their employees, in dealing with and thinking about the impact that this organization has on the world. And they are definitely a leader in DEI. And not only in what they advocate for, but how Darren Walker runs the organization. It's stellar. The second is surprisingly Uber. I say this surprisingly because it had such a shaky start, but Dara, the CEO, and the board, from the time that I've joined to now, has made a concerted effort to be a listening, engaging, progressive corporation. There's still lots to do. They're in a very new space, but across the board in ESG, in DEI, and how they engage their employees, Dara and Uber is really leaning forward and leading in this new space. They have to. I mean, they're in a very competitive space. The third very important organization is Teneo. Teneo went through ups and downs, and I joined it as the chairwoman, and I'm not tooting my own horn here, but this is a company, an organization that had a couple of one near-death experience, and used that to fundamentally build on the strengths that it had across the board. What are their values? What do they stand for? How do they support their clients? How do they think about the world? How do they engage more people? Just a very, very well done, I think, leadership example. And Paul Carey, the guy who runs Teneo now, is doing an excellent job there. And then, the final organization I'll talk about is the Mayo Clinic. I'm on the board of the Mayo Clinic as well. And this is an organization that was under the weight. You can imagine what it has to go through under the weight of COVID. And they did this engagement with the world, engagement with the communities they serve in exactly in almost a spiritual way, the way that you would want a healthcare provider who has in their hands the solutions to many people's problems, how you should do this: engaging broadly diversity, engaging innovation, engaging risk across the board so that they can actually be better providers. All four of these organizations are, and I could mention some others that I'm not associated with as well. But I think it's really, it's a time that that business leaders have some permission and some cover to take risks. Government leaders have permission and cover to take risk as well. I wish they would act a little bit faster than they are right now. But I think it's an interesting time because it could be risky. It's really bad. Profits we thought would be lower, costs are going to be higher. It didn't turn out that way at all. By the way, on Wall Street and Main Street's still suffering. And that's one of the things that these companies have to turn their eyes towards, which is how do we engage more broadly Main Street.
Talk about that, because we are still at a point where this feels like a K-shaped recovery. It still feels like inequality is building, not receding. Yes, we all perhaps are far more aware of it, but you have written so painfully clearly, like the touch, the sense, the smell, the feel of poverty because you lived it. Mm-hmm. How are you now looking at perhaps drawing out some of those unconscious biases when it comes to education, when it comes to, allowing people to not have to just get into university because they can swim a lap of a pool, and what are the elements of change that you're seeing on the ground to help Main Street at the moment when we sit here perhaps slightly removed and far close to Wall Street for our sins?
Yeah, I mean, Caroline, this is one of my biggest struggles and one of the areas that keeps me kind of going every day, understanding, realizing, having been a victim of or a recipient of just a level of weight, a weight that you have nothing to do with creating, but you actually live under every day. The way that we have to deal with it in the spaces that we are very close to Wall Street, not as close anymore to Main Street, is we have to engage as broadly as possible. First, in the companies that we deal with, CNN, Bloomberg, boards that we work with, whatever it is, we have to actually be aware of the work environment that we have and create a better one. That work environment includes philanthropy. It includes outreach by your employees. It includes you engaging with the communities that you work in and live in. So that's one. The other is you got to support not-for-profits or NGOs or whatever it is that you're passionate about, everything from schools to social justice organizations to arts organizations. Literally, the idea that we literally have our pocket of money and grace and whatever it is, and we go out every day with our hands on it and come back with a little bit more is something that should make us feel a little bit uncomfortable, particularly if we have not shared that broadly. And the second thing to do is to absolutely engage and share it broadly. And then the third is we have to advocate for change at the highest levels of government and the highest levels of business. Diversity is what we were speaking about. We should have diverse boards. Plain and simple, this is like an old conversation that is almost ridiculous to keep talking about. The fact that we don't have one should be a question about where have you been? We should have governments that actually look out for the people who are least able to look out for themselves, that they should create swim lanes for good business, swim lanes for innovation, swim lanes for great education. And we have to engage. This is no longer, I've been on this horse for a while. This is no longer a time when the people who have money and power can sit back and not advocate for change that allows more of the population of the world, and in this case, very specifically, the United States, to participate more broadly, more easily, in a more graceful and fun way with the riches of the world. And right now, we're making progress, Caroline. This is not, it's dead. We're making progress from 2 years ago. The benefit of the pandemic is that people are starting to look up and say, man, this probably wasn't anywhere near as good as we thought it was. So we have to actually redo certain things. I heard the very end of Chuck Robbins' interview, and he was talking about innovation and how, there were things we thought would never be possible. Literally, having board meetings where no one is in the same room. This was almost an anathema. You couldn't do this. Now it is the par for the course. It's the way it's done. By the way, it can't be this way for all board meetings, but we've proven to ourselves that we don't have to waste a whole bunch of fossil fuels by flying to a place to have a meeting for 3 hours and then flying home. Not probably very useful. So there are a whole bunch of things that we've learned and are learning that are fundamental changes to the law, right, of the way business was done, the law of the way we selected boards and leaders, the law of the way that we looked at people who had less. All that's changing.
Do you feel the accountability level is there? Is there a risk, as we all hope that we understand this virus more, we start to be able to return to the office in whatever way the companies and the boards that you speak to of? We want to reclaim the fun that we've all missed, and we stop holding ourselves accountable?
Big risk. Absolutely risk. And here's the way that we mitigate that risk. We keep talking. We keep acting, we keep doing, we don't silence. You look at some of the old crusades for everything from workers' rights to, worker safety to, diversity, anything, worker pay, executive pay, anything you want. The way that it gets done is there's not these guys who are doing it over there. These guys are us guys, right? Particularly in America, these guys are us guys. And the way that we don't lose ground is that we don't allow ourselves to relax until the journey is done. I don't want people to believe that this is like this unbelievable drudgery. You get up every single day and you carry the cross up the hill of diversity of ESG. No, you engage in a very useful, in a very joyous way. You engage around the possibilities, and that's what I think is going to keep us going. That's what's going to keep the country and the world from sliding back. They're better, the angels of our soul, a great book I read a while ago. I think it was by Pinckney. It's a true, violence is lower today than it's ever been in before. And why? You would think, from what we see, it's worse. It's because people do learn and people do get better and people don't back off.
Let's be joyous now. We've only got a minute left, but there's one phrase that sticks with me from your memoir, and it's one that your mum always used to you, and it is, don't let the world happen to you, you happen to the world. What are you going to happen to this world in 2022? Because you just helped us think about how we can have a little bit more accountability. What are you going to, what joy are you going to bring, and what focus are you going to have?
This is something that's interesting. I don't do resolutions generally. I mean,
Yeah, me neither.
I can't keep them, but this is a year that was kind of strange. So I started with the idea that I was going to say one thing. I was going to pick a word and try to live by that word. And the word that I picked was purposeful. And it was more focused on me to make sure that I didn't waste time and energy on things without making, so everything has to have a purpose this year. Obviously, Caroline, that's not going to be the case. I'm going to fail more than I succeed here. But the idea is that I do have a bully pulpit. I do have resources. I do have the power to get certain things moved along. And I have to make sure that I just keep being very purposeful in the use of those things, because it's no longer, it has never really been, but it's clearly no longer about me alone. I have 2 children. I have nieces and nephews, only two nieces, and lots of young people. I have neighbors. The world is not set yet. We have to kind of keep making it a better place. And that's what I'm trying to be purposeful this year on just about every action towards a good and positive reaction in the world. I'm hoping I could be a little bit better than I've been in the past on that.
Well, we are so thankful that we made it, that the Bloomberg year ahead made it into that purpose, and that we hope that you made impact through this conversation. And as always, you do it with such grace. We thank you so much, Ursula Burns, chair of Teneo, but on so many other boards, and making our impact felt every day. Stay well. Thank you.
Thank you so much.
Hello, everyone. My name is Lauren Keel. I'm the General Manager for Bloomberg Green. I'm pleased to be joined today by Jan Jenisch, the CEO of Wholesome. Jan and I are very excited to begin our conversation with a new announcement about the year ahead, which is that Wholesome and Bloomberg Media will be partnering together across the next year around both the Bloomberg New Economy Forum and Bloomberg Green. Jan, we're thrilled about this new partnership.
Yes, thank you. We are also thrilled to be working together, and we look very much forward to this collaboration and to develop interesting insights together.
One of the central elements of our partnership is going to be a new circular cities barometer. So Jan, tell us, why are we focusing on circularity?
Well, circularity is the opportunity of our time. Our world is growing with GDP at $94 trillion. And on this trajectory, we are set to consume 2.3 planets by 2040. So to make this work for people and the planet, we need to shift gears from a linear take, make, waste economy to a circular reduce, reuse, recycle one. And circularity strengthens the local economies because you do it locally in a way that is socially inclusive, creating new jobs, and every 10,000 tons of waste that is recycled can create more than 100 jobs. And the repairing and leasing economy even more. So it's climate friendly. Recycling 80% of materials would reduce 50 billion tons of CO2 emissions by 2040, as well as being nature positive, replacing virgin materials with recycled ones, preserving biodiversity.
And we're going to be looking at circularity, particularly as it relates to cities. So why are we zooming in on cities?
I think cities are on the front lines of leading the shift from a linear to a circular economy. Cities are moving very fast on this agenda because they are growing. We expect 70% of the world population to be living in cities by 2050, adding another 2.5 billion people. So cities have the critical mass to make a difference, because that's where the world is being built at the moment, with broad access to recycled materials. The only way cities can grow while staying within our planet's boundaries is by becoming more circular. So circular cities are many things. They are powered by renewable energy, they are connected by green mobility, they are built with smart buildings and nature insight and much more. So together with Bloomberg, we want to go deeper in our understanding of what makes a city circular, what levers are at play, what works best, what can be replicated, what kind of bottlenecks are in the way. By understanding better the fabric of a circular city, we can empower more circular living so that we can all play our part. That's why we are excited to be launching the Circular City Barometer with Bloomberg today, with the aim of unveiling our first results already at the Bloomberg Green Earth Summit in April.
We're looking forward to it as well. When you think about your work at Wholesome and the building sector more broadly, what does the circular economy mean for you?
For us, circular construction is nothing less than our future. Our vision is that every new building should be made of at least 50% of recycled materials. With our world building the equivalent of a New York City every month, circular construction is the only way to make it work for people and the planet. At Wholesome, we are at the forefront of leading this shift with a focus in 3 areas. First, we are recycling materials across all our products. In 2021 alone, we recycled over 50 million tons of materials, being one of the biggest waste recyclers in the world, and we set the target to doubling this to 100 million tons by 2030. Urban mining is a key priority for us on this journey. This means recycling old buildings into new ones. For instance, with our Wholesome EcoPlanet range, we launched the world's first cement with 20% recycled construction and demolition waste inside. And this is just the beginning. We're going to roll out that product to all other markets. Second, we are reducing building materials use and footprint by empowering smart design. We are developing an innovative lightweight flooring system, for instance, with the Swiss University ETH that has 50% less materials inside and an 80% lower carbon footprint compared to traditional structures. And this is fully recyclable. We expect to be building 10 billion square meters of such floors every year to support today's urbanization trends. We can make a real difference with such circular solutions. Thirdly, we are repairing and renovating buildings to make them last longer, which is a key priority for us. In Europe, for instance, 80% of today's building stock will still be in use by 2050. So we better make them fully energy efficient. We are constantly expanding our range of smart solutions to repair, to refurbish, to renovate, and to make buildings smarter and more energy efficient, from roofing to installation systems. So circular construction is already happening today. We can scale it up faster by partnering across our value chain. We all have a role to play. Public authorities can evolve building norms to make material recycling mandatory. Building owners can put their procurement to work to specify more recycled materials. And companies can innovate to develop new technologies from recycling to digital material management. So my call to action today is to join us to make circular construction happen faster, investing in circular construction, which will strengthen local economies, create new jobs, is climate friendly, nature positive, and that's why, for me, it's the business opportunity of our time.
We look forward to looking at all of these issues in more detail this year with the Circular Cities Barometer. Jan, thank you so much for joining me to announce our new partnership.
Thank you, Lauren.
Hello, Mark Dawson here, Senior Editor at Bloomberg Live and Editorial Director of the Qatar Economic Forum. We're heading to the Middle East now for the view from Qatar, and we're honored to be joined by Sheikh Alwaleed Al-Thani, who is CEO of the Investment Promotion Agency of Qatar, and he's in charge of encouraging international business to invest in Qatar. It is, of course, a huge year for Qatar, with the FIFA World Cup only 11 months away in December. But before that, Sheikh Ali, keen for your view now in January. Omicron is still with us. How is the virus impacting your business and investment outlook for the year ahead?
Well, thank you, Mark, and it's a pleasure to be with Bloomberg looking at the year ahead. And as you mentioned, currently all eyes are centered on the post-pandemic recovery. Economic prospects diverge across countries and regions. We think that there's two main determinants for how different countries are progressing. First is fiscal support during the pandemic, and the second is the vaccination progress. Now, when you come back to the Middle East and North Africa, the region is expected to accelerate growth to around 4.4% in terms of GDP. To Qatar, I mean, when we look at those two determinants, we have certainly outperformed the region. Vaccination is at around 90% of eligible adults. Fiscal support has been strong throughout the pandemic. Qatar maintains a very strong fiscal position relative to GDP growth, and that's due to a number of different headwinds, including the commodities super cycle that we're now in.
Yeah, thank you. So about if we had this conversation in November, I would have been coming to you from Hong Kong. I'm now in New York. Obviously, America and Hong Kong, very different approaches to the virus. In the US, we're talking about learning to live with the virus. Is that something that Qatar is looking at?
Definitely. I mean, we believe now that we're heading towards a more kind of endemic phase. The tools that we have are different than before. Economic prospects continue to normalize, and we believe that the transition to an endemic phase, or a so-called endemic phase, can trigger the investment appetite, accelerate business activities, heading towards pre-pandemic levels while maintaining the secular trends such as digitization, supply chain resiliency, and localization. Qatar is maintaining its drive towards economic diversification and greater private sector participation in these efforts.
Good. Has your strategy changed now that we're approaching an endemic sort of outlook? Has your strategy changed in the past few months, or is it the same? Has your strategy been the same these past 2 years?
Well, look, our organization, like all investment promotion agencies, has to adapt in terms of strategy. First, in terms of maintaining a business continuity that was in 2020 to 2021 towards reopening, and also in terms of targeting new sectors in the economy, the growth of the digital economy, such as software development, data centers, cloud computing, ICT, digital health, artificial intelligence, and machine learning. These are new sectors for FDI promotion. The favorable business environment, availability of skills and talent in the region, we see that as being a lucrative value proposition for Qatar. Despite, the challenges of the pandemic, we see these sectors continue to drive the knowledge economy. Our non-hydrocarbon portion of the GDP, which sits at 50%, is maintaining that proportion despite the high hydrocarbon prices. So there is quite a few headwinds, including the World Cup by the end of the year, Qatar's economic diversification efforts, and as well as a new commodity super cycle that we look towards accelerating our growth in terms of attracting FDI.
So you mentioned hydrocarbons and tech there. Are there, maybe give me your top 3 sectors. Is there a that you're targeting for investing in Qatar? Is there a particular sectors that you're targeting?
Yeah, definitely. I think there's a number of new emerging sectors and a number of sectors that are more kind of traditional in nature. So agri-tech is a new area that Qatar is currently witnessing a significant growth in. Industry 4.0, such as technology, electric vehicles, automation, professional services and media, sports, which is not only limited to the World Cup, but also other large-scale sports events such as the Formula One, the 2030 Asian Games, and also the growth of sports tech as a sector within Qatar. Tourism and hospitality have seen significant growth coming into kind of the post-pandemic phase. And also now with ESG and the circular economy. So many opportunities around these sectors, which we look to promote.
Agri-tech, obviously key to Qatar's self-sustainability. Obviously, we're all friends now in the region from the embargo and blockade that was in the past. Is that self-sustainability still a key driver of what you're doing?
Yeah, definitely. I mean, resilience or resiliency is the overall theme of the Qatari economy. I mean, and this is evident. I mean, we've witnessed the Qatari economy withstand external shocks time and time again. From a logistics point of view, from diversifying our supply chain, and from a self kind of sustainability, point of view. All these have contributed to building resiliency within Qatar. This we view as a value proposition in itself, and we continue to promote that part of our economy as part of the economic diversification efforts that Qatar is undertaking.
So, World Cup in December, not that far away. I think the infrastructure's ready. We're all looking forward to it. In your area, how much do you think the World Cup is going to benefit you? I mean, the overall benefit to the economy is in the billions, but in terms of businesses coming into Qatar, hopefully post World Cup, is there a number that you're targeting or envisioning?
Yeah, definitely the World Cup is an impetus for growth, not only in terms of FDI, also in terms of tourism, of putting Qatar on the map, in terms of sports, in terms of events, hosting large-scale events, and I mean to showcase Qatar as a destination, as a place to live and work. This is an opportunity, and we believe that we are well positioned to benefit from hosting such an event in Qatar.
Now, all the coverage of the World Cup, unfortunately, not all of it's positive. And there's reports that certain teams might be protesting on the pitch or things like that. Do you think these events, these sort of protests, perhaps might scare away potential investors? How are we preparing for that?
No, we welcome, I mean, scrutiny to a certain degree, and we believe, I mean, the increased spotlight on Qatar leads to greater reforms. So we've seen Qatar reform its labor system. That in itself led to a greater retainment of talent within Qatar. So, I mean, the greater spotlight, greater scrutiny, we all believe that to continue to benefit Qatar's value proposition. Qatar has always been open to this debate, and we've taken comments into account. We've adapted, we've changed laws, we've reformed our regulatory environment. So we see, I mean, that as a positive thing in the long run.
Okay, so the World Cup, we're seeing countries from all around the world come to Doha. With regards to your strategy, are there particular areas, regions that you are particularly focused on? Asia, is Asia a #1 target compared to Western companies being #2? And is with regards to geography, what's your strategy?
Yeah, generally, I mean, we are geographically agnostic in terms of attracting FDI. But when you look at the numbers, most of investment into Qatar comes from the US and Europe. The US remains as Qatar's single largest foreign investor at around 100 billion FDI stock. That has traditionally been the region where most of our FDI originates from. Now we've seen growth as well, especially in Southeast Asia, from South Asia as well. That segment is starting to get more diversified, and we look to promote, in our strategic markets, being the US, Europe, Southeast Asia, and China. And there are many sectors that we look to promote within Qatar that complements this geographic approach.
With the US as your #1 partner, investment partner at the moment, does that impact your China strategy with regards to investment?
No, I think, I mean, there are, a number of opportunities both towards, different geographies. So we don't see really a large impact. I mean, Qatar is a fairly an open, and liberal economy. We welcome investments from all regions in all sectors, even though we prioritize certain sectors based on our own kind of development agenda. So Qatar, I mean, we welcome everyone.
Good. So obviously there's even though, as we said, we're all friends now in the region, but there's now still some healthy competition, which is great with regards to Riyadh, Dubai, Doha, and broader Qatar. So how do you pitch Western companies that might be saying to you, I'm thinking about Riyadh, I'm thinking about Dubai. What's Qatar's USP? What's your pitch?
Yeah, look, I mean, we do not, look unfavorably towards regional competition. We believe that growth in the region benefits Qatar, and you can see that in other areas. We do not exist in a vacuum. So if the UAE grows economically, Saudi Arabia grows economically, that benefits us in the long term. Qatar has a strong and resilient economy. We've shown that from our strong fiscal position, which will continue to outperform our GDP growth, and we're looking to maintain that. That would be at the forefront of the GCC forecast, with around 4% GDP growth in 2020 and 5.7% in 2022. And that is from the recent IMF report. Qatar is the second most competitive economy in the GCC, the second in terms of economic freedom in the Arab world, and the fourth highest GDP per capita globally. We have a very business-friendly environment. We represent a strategic launchpad for businesses from Qatar to the world, being connected at a gateway between East and West, strong connections to markets in Africa and Asia, strong investment protection ties globally, the world's best airline and airport. So connectivity, knowledge, innovation, business-friendly environment, that is our strong points. And I would like to highlight that.
So yeah, we've got 30 seconds left. So I'm going to see if you can give us a scoop. Who's going to be signing post World Cup? Who do you think is going to be signing deals with you? Who's going to be the first to sign a deal investing in Qatar?
Well, look, I mean, we announced them as they reach fruition. I would just state that our pipeline is strong going into 2022. We have a number of secular headwinds, such as the growth in the hydrocarbon sector, Qatar's North Field expansion would lead to significant growth and other investment opportunities. New legislative reforms such as the PPP law, greater private sector participation, and also effective government incentives and economic management. We believe that would be the impetus for greater FDI growth going into 2022 and beyond.
Thank you. Thank you, Sheikh Ali, for your outlook on the year ahead. And you can hear more from the Middle East and the view from Qatar later this year. Stay tuned later this year for the second Qatar Economic Forum, powered by Bloomberg, this June 20th to 22nd in Doha. Sheikh Ali, thank you.
Thank you very much.
Thank you all for joining us for this edition of The Year Ahead. We hope you enjoyed the conversation. And thanks again to all of our speakers for such a wonderful program. And thank you to our presenting sponsors, Wholesome and Invest Promotion Agency Qatar, and our presenting knowledge partner, McKinsey & Company. If you'd like more information from our sponsors, please visit the resources tab on your screen. And most of all, thank you for being such an engaged audience. You can rewatch any part of this event on BloombergLive.com to view it on demand. And thank you for watching. We'll see you again at the next one.
julep, pop 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 julep, pop 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 julep, pop 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 pop. Thank you.